Professor Nam Yong Lee's long commentary. In the age of AI accountants, let AI handle the numbers and humans shoulder the conscience. Hello, this is Nam Yong Lee TV. AI is transforming the world of accounting and tax practice from the ground up. Many citizens still think of AI accountants and AI tax professionals as something far off in the future, but by global standards, artificial intelligence is already deeply embedded in the core processes of accounting and taxation. The World Bank and the IMF are recommending integrated public financial management systems and automated accounting and expenditure control systems to governments around the world, and in advanced economies, major accounting firms and finance ministries already use AI on a routine basis for document recognition, rule checking, and anomaly detection. In Korea as well, with the combined financial statements of the central and local governments now far exceeding 800 trillion won, the era in which humans scan for errors with Excel and the naked eye is effectively over. The key question, therefore, is not, will AI take jobs away from human accountants and tax professionals? The real question is, in an era where AI accountants and AI tax systems are responsible for the numbers, in what domains will human accountants and tax professionals be responsible for conscience and for relationships? Accounting and taxation are not merely techniques for reconciling figures. They are the work of translating complex relationships between citizens and the state, between companies and investors, between the current generation and the next, into numerical form. AI is outstanding at computation and pattern recognition, but it cannot possess the philosophy or conscience needed to decide what kinds of relationships should be designed and how. From the perspective of relational philosophy, the rise of AI is not about rendering human experts powerless. It is an opportunity to restore them to their essential roles. Once human accountants and tax professionals are freed from data entry and routine calculation, they can focus on what truly matters, serving as interpreters for citizens and investors, strategists who design the relationships between the state and the corporate sector, and the final ethical bulwark against fraud and greed. The issue is not technology itself, but our own self-understanding, where we choose to place ourselves in this new landscape. AI accountants and AI tax systems, and human accountants and human tax professionals must in fact do fundamentally different kinds of work. The strengths of AI accountants and AI tax systems are clear. They can work around the clock, reading and analyzing millions of transactions. They can retrieve relevant laws, precedents and regulations within seconds, and are highly capable of detecting statistically abnormal patterns. Routine, rules-based tasks, foundational financial accounting work, voucher classification, receipt recognition, first-round checks of tax law applicability and drafting preliminary tax adjustments can be handled by AI faster and more accurately than by humans. These are precisely the tasks that junior accountants and entry-level tax staff use to shoulder. By contrast, the limitations of AI are just as clear. AI cannot decide what kind of information will truly reassure citizens and investors, what effects a management decision will have on employees and local communities, or in which direction public finance must move to reduce the burden on future generations. It may be able to describe correlations among numbers, but it cannot answer questions such as, what is fair, or which choice is responsible. AI cannot read a client's facial expressions, nor can it feel the anxiety in a CEO's eyes or the anger and distrust of the public. Human accountants and human tax professionals must differentiate themselves precisely at this point. First, they must act as relational designers. They must use accounting standards, tax law and contractual structures to design the relationships between companies and investors, between banks and creditors, between tax authorities and taxpayers, and between central and local governments. Second, they must serve as ethical arbiters. Even when AI determines that a particular structure is legally permissible, the ultimate responsibility for blocking arrangements that are toxic to society as a whole rests with humans. Third, they must be client-centered interpreters. They must translate complex accounting and tax structures into language that citizens and investors can understand, thereby building trust. AI is a tool to assist in calculation. Humans must remain the ones who assume responsibility. The era of sampling-based audits is over. We must move toward full population audits. Until now, most financial audits have relied heavily on sampling. There were simply too many transactions for human auditors to examine every individual voucher and receipt. Auditors would select a sample, test it, and then infer the reliability of the financial statements as a whole using statistical methods. This approach, however, has structural limitations. Fraud and earnings manipulation hide precisely in the gaps where sampling does not reach. Malicious accounting fraud exploits those blind spots of sampling by design. In the age of AI accountants, this logic can change completely. When AI is combined with integrated accounting information systems, it becomes possible to conduct full population analysis, examining every single transaction in real time. Because all transaction data are digitally recorded and AI can scan the entire population almost instantaneously, the excuse that there is not enough time, so we can only sample, no longer stands. High-risk transactions are automatically flagged, and unusual items that deviate from normal patterns are alerted immediately. Once technology makes full population audits feasible, moving from sampling to full coverage is no longer a technical issue, but a question of will. In this context, human accountants and auditors must analyze the alerts generated by AI and interpret their meaning. In an era of full population auditing, it becomes much harder to conceal fraud and error, but at the same time, the ability to distinguish between honest mistakes, intentional deception, and flaws in GDU design becomes more important than ever. If full population systems are to inspire trust rather than fear in citizens and investors, human experts must be able to explain in relational terms why this particular transaction is problematic and what institutional reforms are needed. We must redesign financial cost and management accounting with AI in mind. Accounting is not a single monolithic discipline. Financial accounting is the language used to present the financial state of companies and governments to external stakeholders such as investors, creditors, citizens, and public authorities. Cost accounting is the tool for analyzing how much cost goes into a single unit of product or service and for building pricing and production strategies. Management accounting is the internal compass that enables management to make decisions, formulate plans, and control performance. Each area has distinct purposes and distinct clients. AI accountants can act as catalysts of innovation in all three areas. In financial accounting, AI can learn from several years of historical data, detect abnormal trends in revenues, expenses, assets and liabilities at an early stage, and issue warning signals to investors. In cost accounting, AI can integrate process data with inventories, labor costs, and energy usage to uncover hidden waste and calculate product and customer level profitability with precision. In management accounting, AI can integrate real-time sales, cost, and cash flow information and simulate what the world will look like 3 years from now if we make this decision today for management. The role of human accountants here is to clarify once again the purpose of each branch of accounting. Financial accounting must place trust above all else from the standpoint of citizens and investors. Cost accounting must reflect the voices from the production floor so that it leads to process improvement and enhanced competitiveness. Management accounting must be structured so that it is tied not only to short-term performance but also to medium and long-term strategy. AI can calculate vast arrays of figures, but it is human accountants who must decide how to arrange those numbers for a given purpose and what signals should be communicated to which clients. This is an exercise in intellectual design. Accounting and tax services must be fundamentally redesigned to be client-centered. Up to now, accounting and tax services have been overly focused on whether the law is followed and whether forms are filled out correctly. Questions about what clients, citizens, investors, companies, employees, trading partners, and creditors actually want to know have often been pushed aside. Complex tax returns and thick audit reports are, for most citizens, little more than undecipherable codes. Under such conditions, there is ample room for fraud, incompetence, and greed to take hold. If we harness AI accountants and AI tax systems properly, we can shift the center of gravity of accounting and tax services entirely toward the client. Citizens can use their smartphones to view visualized charts of government expenditures and revenue structures. Investors can grasp a company's financial soundness and risk factors at a glance. Owners of small and medium-sized enterprises can receive customized guidance on tax strategies and cost structures tailored to their specific business. AI can automatically assemble reports suited to each client's circumstances and questions and generate plain language summaries of complex tax laws. However, understanding the client's real questions and posing them accurately to AI is the work of human tax professionals and accountants. What taxpayers fear is not just the amount of tax itself, but the uncertainty of not knowing when a problem might suddenly explode. What investors fear is not only losses, but the possibility of being deceived without realizing it. Only when human experts read these fears and expectations and design information structures and explanations to match them can AI truly become a client-centered tool. Accounting and taxation must cease to be languages designed for the convenience of governments and corporations and become languages that protect the rights of clients. The combination of FEA 402 financial management and AI is a golden window for reforming public finance. At the national level, the U.S. Federal Enterprise Architecture, FEA 402 financial management domain teaches us to view 6 functions: accounting, budgeting and finance, payments, collections and receivables, asset and liability management, and reporting and information as a single integrated financial ecosystem. Korea now stands at a rare moment when it can infuse AI into all 6 of these areas at once. If we boldly adopt global standards such as IPSAS, IFRS, ISO 2022, and the fiscal rules recommended by the IMF and OECD, and build an AI-based integrated public financial information platform, we can create a system that monitors the nation's finances in real time and detects problems early. When AI accountants and AI tax engines are combined with systems such as GIFMIS and a national fiscal information cloud, the accounting, budgeting, payments, collections, asset management, and reporting data of central and local governments and public institutions can all be connected into one. On top of this system, full population auditing, real-time risk management, and open disclosure of fiscal information to citizens can occur simultaneously. If AI monitors the numbers and the system itself issues the initial risk alerts, public officials and auditors are then free to focus on what truly matters: strategic judgment and ethical decision-making. At this point, the role of human accountants and tax professionals becomes that of architects and guardians of the national finances. Human experts must sit at the table that decides which indicators to monitor in order to prevent fiscal runaway, how to evaluate the performance of ministries to restrain political populism, and in what form fiscal data should be shared with citizens to build trust. A country that outsources its AI systems, while outsourcing responsibility at the same time, is a country that has voluntarily abandoned its fiscal sovereignty. AI-driven accounting and taxation are a monumental opportunity to make all economic actors more scientific in their management. The emergence of AI accountants and AI tax systems is not merely an issue for accounting and tax professions. It is a huge opportunity for all economic actors: companies, self-employed businesses, public institutions, schools, hospitals, and non-profits, to make their management more scientific and more advanced. Tools for analysis and forecasting that were once available only to large corporations and a handful of advanced governments are now becoming accessible to small businesses and individual entrepreneurs. When AI brings together financial accounting data, cost information, management accounting metrics, and tax risk profiles into a single analytical framework, decision makers can base their decisions much more firmly on data rather than on intuition and gut feeling. They can identify which customers truly generate profit, which products actually lose money as they sell, and which ventures carry risks that could undermine the organization 3 years down the road. On the tax side, they can foresee how to design structures in advance within legal boundaries to avoid unexpected tax shocks. Yet whether we seize or squander this opportunity ultimately depends on humans. Ignorant, incompetent, and greedy citizens and managers will try to use AI to shave off a little tax in the short term or to cosmetically enhance the numbers. Responsible citizens and managers, by contrast, will employ AI to make the financial structures of their companies, households, and the state more robust and to lighten the burden on future generations. AI is like a knife. In the hands of a surgeon, it saves lives. In the hands of a criminal, it becomes a weapon. We must abandon ignorance and greed and become citizens who seek truth through numbers. In the end, the true owners of accounting and taxation are the citizens. The national budget is funded by the taxes they pay, and corporate profits come from the wallets of consumers. Yet many citizens still refuse to train their eyes to read numbers. When confronted with financial statements, budget documents, and tax bills, they simply say, "It is difficult, it is too complicated," and give up thinking. This accumulation of ignorance and indifference allows fraud, greed, and populism to corrode a nation's accounting and tax systems. In an age where AI accountants and AI tax engines can present all the numbers in real time, the responsibility of citizens grows accordingly. Citizens who never open the fiscal dashboards provided by governments and companies, and who show no interest in how their pensions and taxes are being used, are effectively choosing to allow themselves to be plundered. Conversely, the more citizens there are who strive to see the truth through numbers and who reclaim accounting and taxation as languages of citizens rather than languages of power, the healthier a country becomes. In the era of AI accountants, human accountants and tax professionals must not remain in the role of trusted shopkeepers who merely process paperwork on behalf of their regular clients. They must become experts who monitor governments and corporations through the eyes of citizens and witnesses who reveal the truth behind the numbers on behalf of investors, young people, and ordinary workers. Only then will the vast volume of accounting and tax information generated by AI cease to be a tool of power and instead become a weapon in the hands of the people. We must choose a country where AI is responsible for the numbers and humans for relationships and conscience. The age of AI accountants and AI tax systems has already begun. Our choice is now clear. Will we build a country where AI monitors the numbers while humans safeguard relationships and conscience? Or will we use AI merely as window dressing while clinging to sampling-based audits, emotional budget politics, opaque spending, neglected receivables, and reckless asset liability management? We do not need to be afraid of AI. What we should fear more than AI itself are ignorance and greed. With AI accountants and AI tax engines, we can shift auditing from sampling to full population coverage and redesign financial, cost, and management accounting into services centered on citizens and investors. We can upgrade all 6 domains of FEA 402 financial management through AI and global standards, and thus transform Korea into a genuine advanced fiscal state. We can make the management of companies, households, and the state more scientific and reduce the burden of debt that currently rests on the shoulders of the next generation. All of this is not a matter of technology, but of choice. Whether we use AI accountants and AI tax systems as tools for integrity, responsibility, scientific rigor, and advancement, or whether we squander them as yet another toy, yet another election slogan, is a decision that citizens and experts must make together. A country that hides its numbers is destined to collapse. A country that exposes its numbers and protects relationships and conscience will grow stronger. Thank you for watching Professor Namyong Lee's long commentary.